They really crushed it. You had a record profit over at Exxon, Chevron boosting its buyback by 50%. These are enormous numbers as these companies just throw off tremendous free cash flow. So let's get back to our question of the day with an oil lens. I think earnings are blank, blank, blank. You get to fill in the word. With us now, Paul Sankey, the lead analyst at Sankey Research. Paul, it's always a pleasure. That's the question. I think oil earnings are.
Probably at a peak. So I think that is a problem, and it certainly seemed like a problem for Valero yesterday, which just, again, had enormous earnings. The question being that why did the market then sell the stock? Mm-hmm. And of course, the concern is, are we going into recession, and do you want to own a refiner into a major recession? So it's a tough one. Having said that, this quarter to date already, Alex, as you know, we're doing $110 Brent as of today. Refining margins are still $40 a barrel. So the stocks do look exceptionally undervalued.
Paul, what are the signs that you might think that we are at a peak?
Well, I just don't see at this stage how things could get a whole lot more dramatic than what we saw in Q2. Having said that, we do believe that the refining capacity problem is structural. We think that the global, particularly European gas crisis is structural. And keep in mind that Europe is competing with Asia for that gas. So it is a global gas crisis. So those are two areas where you could say, we're going to sustain extremely high prices on an ongoing basis. The tough one is if we go into significant demand weakness, will we be forced to see lower margins? And that combination of supply crisis with demand strength in Q2 2022 was a pretty big setup, right? So I think the earnings are at a peak, basically.
So before we get to, and we'll get to that in just a second a little bit more, I just wanted to highlight this Chevron's higher buyback. So they've been really adamant that shareholder reward is going to stay, that they're not going to raise a buyback and then cut it when oil prices fall. So the fact that they raised it this much makes me think that they see a pretty bullish environment. And I guess my question to you, Paul, do you feel like that maybe is a Chevron-specific kind of thing at $100 oil, or do you feel like it's more of an industry signal?
Well, no, actually, the Chevron thing is a little bit different because what they want to do is rate the buyback. So not only have they not cut their dividend, I think now it's sustained nearly 30 years of rising dividend through thick and thin, which obviously contrasts very positively with European big oils, Shell, BP, Total. Exxon has maintained its dividend too, but Chevron's got a better growth track record. But what they want to do is when they start these big buybacks, they want to sustain them without cutting the buyback. And that means, the move that they're making today is very significant. It really does speak to the idea that they believe they're going to structurally generate very high profits on an ongoing basis. Absolutely.
Paul, good afternoon from London. So returning money to shareholders at Chevron. Also, they're talking about possibly increasing Capex, increasing production. How much more could they be doing at Chevron?
Well, I think the Permian is very tight, right? So, I think that there is the potential for some offshore drilling and, maybe some new exploration just because the global oil supply situation just looks so chronically bad. We have a major problem with global oil supply. If you look around the world where there's growth, you really have Guyana, maybe Canada, the Permian, but the list is remarkably short. And then if you look at the performance of OPEC Plus, as you know, it's been massively underperforming where its volumes are meant to be according to quota. And of course, within that, you're including Russia. So there's a global oil supply problem and a huge weight of global population pressure. So I think they're thinking maybe we'll go out and, try and add some additional incremental barrels over time. For sure.
Paul, to that point, though, costs are also super high. Chevron actually was able to keep its costs down 25% versus 2019. So the idea that there's not that many places to drill, at some point they're going to have to increase their Capex, but costs are still so high. And I'm wondering how many levers do you think these guys have left to pull to make shale more efficient, to offset the labor issues, the supply chain issues?
Well, there maybe it's just some messaging here in terms of, the government is watching, and they want to say, look, we're trying to spend more. Actually, you caught me a bit short here because the Chevron call is going to start at 11 this morning. So we haven't had the conference call from the company. For more color, we've just done the Exxon call. And Valero, by the way, yesterday was saying they're not seeing any demand destruction, which was an interesting comment on their call. No, it's definitely tough out there because you do have this labor shortage issue. You do have a quality rig shortage issue. You do have a steel availability issue. So, it's very hard for these guys to ramp up spending significantly.
Paul, in terms of where we are on the oil price right now, I spoke to Amrita Sen earlier on here in Europe, and she was saying, she was asked whether if there was a real change in the Russia-Ukraine story, whether that would have a really big impact on oil prices. And she said, look, we're just not at these levels because of Russia. Would you go so far as to say that?
Well, again, yes. I mean, Valero said that yesterday on their call, which is that Russian crude oil has not come out of the market, and the Russian heavy fuel oil for upgrading is actually coming back into the market. So what's so staggering about this $110 Brent price is that we really haven't lost that much Russian oil at all. And, in that environment, with also Libya coming back strongly and Iran smuggling, that's why I'm talking about a global oil supply crisis. I mean, it's incredible to be at 110, with all these barrels still in the market.